One of the most common questions I get is why do I choose to trade futures? There's a lot of different markets and contracts to trade from stocks to crypto to options, but there are a few specific reasons why I choose to trade futures. First, there's a lot of different futures markets, including commodities, equity index futures, currency futures, and fixed income futures. So, why is this important? Because you combine different strategies in different uncorrelated markets into one portfolio to gain some benefits of diversification. If you look at a year like 2021 and 2022, where equities aren't really performing that well, fixed income's not performing that well given the higher interest rate environment, commodities have performed well, and some currency strategies have performed well as well. So you get this benefit of diversification, and you can trade strategies in a variety of different markets. The second reason I trade futures is all futures are traded on margin. So this provides for capital efficiency and free leverage. Trading on margin in other markets such as stocks, it requires you to borrow from a broker, pay interest on the borrow money to get the leverage you want. So it's not exactly free, and you end up paying interest on the borrowed money. In futures markets, everything is traded on margin set by the exchanges. So you're essentially getting free leverage, but you have to use it conservatively. The third reason is futures contracts have tax benefits that are treated as 60% long-term capital gains and 40% short-term capital gains. So if you're day trading stocks, you'll be subject to 100% short-term capital gains. But with futures, you can trade short-term and be subject to a blended tax rate that's more beneficial. The fourth reason is most markets are traded around the clock, 23 hours a day, 5 to 6 days per week. This is important because this provides for more trading opportunities outside of just market open and market close hours. The fifth reason is there's no pattern day trading rule. The pattern day trading rule applies to accounts that make 4 or more trades in 5 consecutive business days. If you're considered a pattern day trader, you're required to have a 25K minimum account size to trade, and this typically applies to stock and option traders, but it doesn't affect futures traders. So you can trade with a much smaller account size. And for example, if you're trading E-micro S&P 500 futures contracts, the maintenance margin requirements are only $1,000. So there's a lot of benefits for small accounts, and you're not subject to this pattern day trading rule. So that's 5 reasons why I choose to trade futures. There's a lot of different contracts and markets to trade, but there's some definitely tax benefits, diversification, account size benefits. And, I think there's a lot more opportunity in futures than a variety of other markets.